So is that like something I can mention? You know, Cody getting a little wild, you know, over the weekend? No,
I wasn't anything crazy, so
no video.
Ashamed.
There's no
I've been
video
ashamed before. I'm not ashamed today.
there, so we're not going to notice
Live, I see.
any. We're not going to notice any videos popping up. Oh, he's quiet
I don't
now.
want to talk about it.
Welcome to the closing beat, everybody. How you doing today? Hope you had a good weekend. I do apologize for yesterday. I was not partying like Cody. Many of you know I fly a little airplane, and when I landed, I got a flat tire, and so you know, off the runway, and I had to get the tire changed. But sadly, I was not here in town, so I had to find a mechanic and get all that straight. Order, of course, what turned out to be a special tire and not a normal tire, and so that took all freaking day. But I'm here. We're safe. I'm happy about all that. I hit a bird too. That was kind of gross, but TMI, right? All right. Welcome to the closing beat. We talk about stocks here and the stock market. We are financial advisors that actually focus on investing instead of just talking about general stuff all the time. Number of different shows you can check out. Jazz After Dark is going to be a good one here tonight. We'll cover that in a little bit. But today we got to talk about the stock market. I have a problem with the way the stock market sort of performed. And before I say that, I would say other advisors out there are playing checkers and we are playing chess. You know, I had to squeeze that in there. Today, actually, I was talking to a client and I don't think they understood. So we're going to talk more about how accelerated depreciation in real estate really works. There's some horrible advice from some people that are really popular online that sort of claim that it works this way, and the IRS would disagree. So we went over that and hopefully cleared that up so they don't make any silly decisions. We'll see. Oh, do we have a winner of the game, the Guess the Dow?
We do. Your winner from last week was Tate F with a guess of 34,567. So good for Tate. He's not a client, so he's going to take the $100 gift card.
And that was a wild change, was it not?
I wouldn't classify it as a wild change.
The leaderboard changed? Come on.
It wasn't a wild change.
All right. Cool.
So yeah, congratulations to him. If you want to play jazzwealth.com/guess the Dow, your leaders for this or for today: Enoch, Jeffrey, Ramiro, Tate, and Daryl. Those are your top 5.
All right. And we got more people playing too, right?
We got a lot of people playing.
Okay.
Yep.
Hey, there's no catch there, by the way. You're welcome to play. We don't email you or anything. Maybe we should. Little marketing or something. We don't do that. Just basically, if you want to play the game, you play the game. We sort of hope clients win, but it is an honest and automated game, so we cannot choose the winners. And of course, congratulations to Tate. That's awesome there. If you're a client, you can have your account credited, or you can take the gift card. If you're not a client, I can't credit anything, so I just send you the gift card. And I think we're working on e-gift cards now. Is that the case?
Yeah, this week, starting this week, you have the option to do the e-gift card, but if you want to do the physical gift card, that's fine too.
Can it be any e-gift card, like a restaurant or something?
Just like a MasterCard e-gift card. So whatever you want. You want to spend it in a restaurant, you go right on ahead.
Baby steps. You know, it'd be cool to see what people pick, you know?
That is true, yeah.
We'll see what happens there. Okay, anyways, enough of that. Let's get on to the stock market here today. We have inflation numbers coming out tomorrow. Please remember, this is it makes me frustrated at the type of math that we learn in school. The number will go up. The headline number will go up tomorrow, okay? It's supposed to go up. It's not the end of the world. It's not going to change anything. The Fed already knows it's going to go up. It's a mathematical equation. The 12 months ago number, which was much higher, drops off, and the new number comes in. That will raise the number because inflation went down, not up. So I hope that makes sense. I'm going to predict that we're going to have a 3.58% headline inflation number, which will be higher. I don't remember what it was last time, 3.2 or something like that. Core inflation should go down. So 4.3% is what we're going for there. Just a heads up, right? Every time this number comes out, at least last month and this month, I got all kinds of emails. Why does the number go up? I don't understand. Does that mean the Fed's going to do this or that? It's supposed to go up. And it will go up. Whether it goes up 3.58 or not, I don't know, but that's my best guess based on all the data that you can use to actually track that. All right, let's take a look over here at the stock market. Tough one. I don't like this. I mentioned that a second ago. I don't really care, and I hope that this resolves itself quickly. Here's the problem. You have an uptrend. The uptrend is challenged by a bigger than normal pullback. That gets people thinking, was that the top, right? You're there. You're thinking the same thing. August, we have this whole pullback. You then have an attempt, a late August attempt, just like the stats proved and we shared it to you, late August attempt to give you a little bit of a rally. Okay, fine. That rally very very rarely, will just go all the way back to all-time highs. Okay, I would actually not like that if that happened. It didn't do that. So this time it's like, okay, a little bit of a rally to see who's out there, who wants to buy. Stock market pulls back. That's fine too. I'm okay with all of that. Now, based on yesterday, we have this rally higher where you start thinking of what we talked about in our wine and wealth class, the Jazz W wealth play, right? So I mentioned that, went over how that all works. The problem is today, not too bad. Oracle held us back a little bit. We'll cover that in a second. But the problem is we didn't rally off those lows. So now you have people thinking the glass is half full and half empty. You don't like that because it leads to indecision. It leads to choppy, small little ranges there. So think about it. There's people that believe this is not going to be a new high and it's not going to create that higher low overall, and it's going to start to pull back. You have other people that say it's one day. Oracle was kind of poor and that dragged down some other stuff as well. We'll get back at it tomorrow. So I don't know whether we go up or down from here, but you just don't want a lot of that because it turns into this right here, this consolidation, this boring back and forth, tight ranges, meaning the difference between the highs and the lows is very tight, high and low, right? There's not a big spread between them. So we'll see. I don't have anything new to add to this and say that's an amazing opportunity, right? Tough one. Oh, let me go back real quick. One of the other things that bothered me here today, if we take a look, here's the stocks that were contributing the most to the S&P today. And then down here, those that contributed or that drew from it, right? That sort of held us back. ExxonMobil, 1.59 points, not percent. Chevron, about a half a point. ConocoPhillips, let's call it a half a point, balances out, about a half a point each. When is the last time you saw that? Energy stocks leading the market? That doesn't move the markets higher. Notice that? Today's a great example on how energy itself was really strong. Oil price is really strong. I'm sorry. That's what happened. But it didn't pull the market. What happens when Apple, NVIDIA, Tesla, Amazon, Facebook, all those, what happens when they have a good day? The market goes up. It's very hard to get the market to go down. And that really stems from the fact that energy doesn't account for much in the S&P. The S&P is not an equally weighted index where everybody gets an equal share. It is, in fact, very skewed. So energy, I highlighted here, you got 4.62% as of yesterday. That's how much it contributes. So 4.62% of the S&P can have a stellar day. Everything's great. Oh, my God, it's a really strong day. Yeah, if everything else has a bad day, well, okay, what's that? 95+% is having a bad day. It's going to drag the markets down. When you have technology that has a good day, and in particular, technology and communication services together, when those two have a good day, that's over a third of the market. Okay, that can move some markets. So that's a little bit of trouble there when you start seeing, okay, energy's great. Well, if you have energy stocks, that's great. Hey, everything went well. But it's not going to do anything considering it basically has a 5% weighting in the S&P. So a little bit difficult there. And now you know why. Sector-wise, I'll use our sectors page here to take a look at this. I'm going to go out year to date. There you go. Give you a good view of how this works. So if you're a client, this is all available to you. You could use it. Year to date, you have tech in light blue up here having the biggest of pullbacks. Not such a big deal because it's had a good run. You're not disappointed by that, but it's the weakest here in the short term, along with industrial. See the orange line? I'm going to back away. Or we just go like this, probably. There we go. I'm going to back away and see how that's pulling back there. What's doing the best? Just in the real short term here. That'd be that green line there, energy, right? Energy is the one that's rocketing higher here in the short term, right? So definitely something that seems to be consistent. If you look at the price of oil, that's why you don't like the trend in oil, even the short-term extension, right? Look at that. Like any stock that did that, I'd be salivating thinking like, oh, it's going to have a small pullback or go sideways. You don't do that in oil. That's like the one thing I always focus on. Never go counter trend in oil. It will rip your face off. Today, it ripped your face off there. And unfortunately, that means higher oil prices and gas prices as well. We talked a little bit about this last week where, sadly, there's not much you can do about that, right, as far as gas prices go. There's not much the government can do about that, given the current policies that they have. This is likely to continue. I think the average consensus end-of-the-year price is 94 something. I could be wrong. It could be 96, somewhere in there, but it's higher than where we're at right now. That's a tough one. And also you have the oil inventory numbers on a worldwide level, not just here in the United States or in Cushing's or anything like that. The worldwide numbers are coming out, and they hinted today or yesterday that demand is basically through the charts. We're going to see peak demand in oil and energy-related services there. So a little bit tough, but that's what we're dealing with there. If you look at the NASDAQ, I'll go real quick through this. It's the same concept. We don't know. Is truly a higher low and we continue the uptrend? Is it a reversal and a rejection of that? I don't know. And sadly, the sort of decision area is above yesterday's high or below that low from last week. How do we work with that? There's nothing we could do. You kind of like sit on your hands. You got to sit back and wait and see what happens there. If we look at the Russell 2000, right, we're not getting much off of this pullback. The Russell 2000 had the biggest pullback of all the major indices there. It's up about 6% year to date. Totally cool with us. We shared our performance of our small cap fund, both year to date, 1 year, 3 year, 5 year, all that stuff last week, early in the week, I believe. We are beating the Russell 2000 right now here at Jazz by a handful of percentage points. So we're okay with that. 11% versus the 5, basically, let's call it 6% there. And I do want to point out that there are some changes here. I was sad I couldn't make it yesterday because of the Twinkie news. My favorite ticker symbol, I just think it's funny. The favorite ticker symbol here, huge rally in Twinkie. We happen to own Twinkie, and that is getting bought out. Actually, I agree with the merger there. So it'll likely hover right here around 33.5, given the way the deal is structured there. This one stock has added over 1% of our year-to-date returns on our small cap fund. That's kind of cool. That does not happen often. Please do not let me mislead you. That does not happen often. The point of the story was, look at small cap stuff. Get familiar with that. Whenever there's a trend, everybody looks at the big stocks. So what was the biggest trend here lately? Semiconductors. Oh, wow. Okay, semiconductors. That's interesting. There's a lot going on there. It was really exciting. The chips, there's the shortage of chips, all this stuff. While everybody's looking over there, our best performer, onto innovation. Right? Up 86% year to date. While everybody's getting excited about NVIDIA, I mean, I get it. You got to have this stuff, but look elsewhere. Look outside of it. There are smaller companies that are benefiting from this as well. Small caps get overlooked all the time. NVIDIA gets all the AI stuff. It's really exciting. ChatGPT, everything. They're going to kill it there. I don't disagree. But while you're looking over there, not exactly 100% in the space there. Fabrinet. Okay. We own that one. Right? It's participating. It's getting the same love. So broaden your horizons a little bit. Look outside of everything if you can do that. China. Yeah, oil. It's what it is. We are now getting more of our reserves from China than we are here in the U.S. Agree or disagree, that's the way it stands. Chinese imports, looking at crude oil in dark blue, that's a new high. Looking at refined oil, also Brent, if you want to look at that. Slight pullback there, but that did hit a new high as well. These are imports that we're getting from the country of China to help try to support our higher gas prices, and some of them going to our strategic petroleum reserves. So how do you feel about that? Twinkie, there we go. Twinkie, we already mentioned that one there. They are getting bought out. It's kind of an interesting deal. Some cash, some stock. That's good for us. We're happy with that. Oracle, actually, we own this. I'm not going to lie. This was their worst response to earnings right here today, or the response came today. Since December of 2011. Not a good showing for Oracle. The good news, if you can say that, is you're not giving up a whole lot. So it's not like this rallied really slowly for a year and gained 10% in a year and then just wiped it all out in one day. So it's not horrible. It's not the end of the world, but definitely going to be holding back a portfolio if you happen to be participating in that. Get a couple more here and then I'll take your questions. Wells Fargo. Had a lot of clarity. There's a lot of conferences going on right now, so a lot of their top C-suite people are out there trying to get their word out. A lot of stuff out there. The one thing that they came clean on was their commercial real estate portfolio. They've drawn back on that dramatically. They've been given grief on that, and the stock actually suffered because of that. And they said, hey, we're going to actually see some losses from that, but because we made it smaller, it's not going to be that big of a deal. Nobody cares about that. Y'all are looking at Apple here today. Apple with the double tap and the new watch and, all the stuff that they get on the TV for. Okay, I'm not an Apple person, so I don't know if this is amazing news and you guys are all excited or whatever. I saw the Type-C charging port coming back there. Good for you guys. We all already have that if you have another different type of phone. But I get it. Apple people are Apple people. Nonetheless, the stock performed exactly how it does. It is a buy the rumor, sell the news type stock. Whenever they have these announcements like this or the Worldwide Developer Conference, the stock tends to sell off during that. It does not go up. That is, I've said that every time. Now you kind of see that's what's happening. And lastly, we got the Container Store. This is a bit of a testament to no matter what stupid idea you think you have, if you think it's a dumb idea or your friends tell you that's a stupid idea, why would you do that? Think of the Container Store, right? Honestly, I would have said this is the dumbest thing you could have done, but these guys literally started a company that sells containers, the totes, plastic stuff. That's what they started with, boxes and containers, the plastic containers, safeguarding your personal assets, papers and things, waterproof containers and more. But besides the stock price, the joke's kind of on me because this is a company. They're out there doing their thing. Small format stores where they're focused. Sadly, they're not making a lot of money from that. They're going to expand on that. They expect to do first year revenue of $5 million in their small format stores. And then they hope to open like 70 to 100 of them. I'm not joking. That was whatever the number was. They made money on custom spaces, closets, kind of things like that. That's their focus. It's not really like, I just want to point it out because it's in the news. I'm not saying this is a great stock or it's a great company or anything. I just am like, these guys motivate me. You know what I mean? People told them, can't you just buy containers on Amazon? And they were like, yeah, but we're going to have a store just for them and it'll have a lot of them. And people said, okay, we'll invest in that. So, yeah, that's what you got there. All right, I'll take your questions if you have any. Tonight's Jazz After Dark, there are a whole bunch of changes to RMDs specifically for this year, and the deadline is not the end of the year. It's supposed to be, right? No, well, for most people, but it's not going to be the end of the year. September 30th is actually going to be the deadline for these new changes. If you want to know what they are and you want to participate in that, come hang out with me, and we'll go over all that. Yeah. Tate, our winner there. Fast Eddie says, do you auto your drip? You can. You don't have to. It's not required. We do by default because most people are just kind of thinking, let's get going. So we do that by default until I find out otherwise. I saw the Alaska issue there. Yep. That's just becoming more widespread. Agree or disagree, we have to go with the numbers and go, as long as that's happening, gas prices are going to get to be more because the demand globally, not just in the U.S. Remember, oil is a global commodity. So the demand globally is extremely strong. And that doesn't even include China really ramping back up over there. So it's going to be fun, especially as we get into the other commodities as the weather changes. Hint, hint. But I don't make the rules, I just have to really read the rules and tell you what we're doing and how that affects things. So we'll see. We'll see what happens there. Yeah, and by the way, I am not a fantasy. I've never played fantasy football. I barely know how it works, but second place after week number 1. Just saying. Just throw that out there. Barely second place, by the way. Like I almost could have been first place, so you know what I mean? I'm not messing around with that. Tom says, hey, Dustin, what is your opinion on the YieldMax ETF like Tesla for high yield dividends? This is slowly becoming more popular. As long as you know what you're getting into, no investment is bad. You're more than welcome in any stretch of the imagination to say, I would like to invest in rare coins. Okay, I don't know much about them, but as long as you know the type of risk you're getting into, I'm not opposed to any type of ETF that wants to get as wild as it wants to get. Sadly, most people won't read through this. I actually read through their entire prospectus. I skipped the boring stuff, but I read through it to see how do they do this. They don't own Tesla stock. They never once will participate in Tesla stock. So just as long as you know that and how they're going to participate, and in particular, all the way at the bottom, how it will be taxed, then I have no problem with the Tesla or the Apple or AMZ or all the other ones that go with the top 7 stocks. It's just, you're going to participate. And the wilder it gets, the higher the yield will be there. JW, do you see the market turnaround next month? Seems sluggish this month. Well, I would agree with that. So far this month, it's as if we didn't come back to work. And you can't say the volume hasn't been there. There's been action. It's just kind of like nobody's willing to make a major decision. So it makes you worry about the month of September. And of course, the weakness that you're seeing in those big names. How long can those top 7 stocks? Think about it this way. If you take the entire S&P, we're trading forward multiples of 19. Okay. That ranks in almost the 80th percentile in terms of valuation. All right. Maybe that's still a deal to you. If you take out just the top 7 stocks, you lose 2 points on your forward earnings estimates, meaning you go to a 17. And we just removed 7 stocks. So it shows you the impact that they're having. How long can they do that? How long will you pay more and more and more and higher valuations for these companies? That is like one of the things that I laugh at you guys about at night. I'm like, who's doing this? Like, it's fine while it's working, you know, music's playing, run around the chairs. That's fine. Kirk says, I retired from fantasy football and it saved my marriage. I've heard some stories about that. One guy in particular that's in the group there has gotten a lot of grief from that. By the way, you see the text messages they send back and forth?
I did catch some of them. Yeah, it's a typical fantasy football league for sure.
Yes, these guys are rough. I'm just quietly in the background. I actually changed my icon picture to Joe Biden because they're all like staunch Republicans. I'm like, this is going to make them mad.
That's up.
Being at the, almost the top of the leaderboard there. But, they take this seriously.
Yeah, no, it's real stuff.
But congratulations, Kirk. That sounds like it was probably the right choice because I'm now seeing how people get crazy about this. Tesla is the new flavor. They're very new, by the way. Yeah, he's right. These are not long-term funds. They have not been through COVID, right? That type of volatility. So they're not even allowed to post, like, hypothetically how their performance would have been there. But essentially all they're doing is creating a synthetic covered call. It is not a true covered call like the RYLD or the SYLDs and things where, for the most part, they are buying the index, maybe use futures or whatever, but they're buying the index and then selling calls against a physical backing of a product. These guys are using synthetic covered calls so that basically so they can scale, right? It's because they can't scale if they just buy the stock. It doesn't, the math doesn't add up as favorable as it does by doing synthetic covered calls. As long as you know that, I'm all good. Any thoughts on Albemarle? No, there's a lot of stocks that look like this, and this is what drives me nuts. The market is essentially just powering higher with its fits and starts, but it's powering higher, and yet you have a lot of names that are like this, which makes you think the market should look like this. So it's not something I would look at as far as new positions here unless you're like a discount buyer. And even then, what's to say that this is the bottom? I'm very particular about that. So I'm not going to guess that this is the low, especially after it tried to rally off the low and got rejected immediately. I'm going to let that bleed off a little bit, take a break, let people reassess what they want to do. That's what I would say about that one. Why won't the market dump? So the trouble is there's no real reason for the market to fall apart. Like, supposedly growth is there. Money, even though we're spending more on oil and mortgage payments and things, the money, you guys are still spending money, which means the companies that are reporting earnings is not as bad as we thought it would be, which means overall growth in the U.S. is not as bad as we thought it would be, and they're predicting much stronger. I see it coming in around 2%, but they say 5.8 just in the third quarter here. I don't know about that. But it's what you got. You still have that height of optimism in the market. Maybe not as strong. We're not expecting 40% rallies from here, but people still believe there's meat left on the bone. That makes it a little tough. Yeah. Banks did well. What was that? Like the second best performing sector here today. A lot of the bank stocks that we have that were sort of affected by the banking crisis and things, that short-term thing that we had, really came off their lows. Really sort of had a nice little reversal today. I don't know if that's the start of anything. Morgan Stanley would be the same there. So this one gives you a little bit of sort of optimism that, hey, if I'm ever going to add on a day, why not add on a day where the previous day was nasty and then we reversed all of it? Seems like people are pretty optimistic. Remember, the game of, the market, trading, long-term investing and all that is less about your opinion. It's like football and all this fantasy stuff. Your opinion really doesn't matter. What everybody else is thinking is where the action is. Look at the money that was bet on Mr. Aaron Rodgers the other day, huh? You didn't see that coming. Got him on that one. So it makes a big difference there. Soft landing or crash. I'm still going to go soft landing, but which means, if you don't follow, soft landing means very minor and short-term recession, but there will be one. Hard landing, I don't have anything there. We're not stopping anything. There's not like a bubble somewhere. AI, okay, sure, but that's, nobody's willing to give up on that just yet. So I'm still going soft landing there. So many of the finfluencers, that's a word. Oh, wow. Saying that residential real estate is going to start reversing soon. Will be some signs to look at to show that happening. Just did that. Did a whole slew of that we did it last week. We showed the delinquencies. We showed the number of people going from current on their payments to being 30 days behind, the number of those transitioning to 60 days behind, the overall delinquency rate. So all of those right there together, about 5 little metrics there would be what you would want to continue to watch, in my humble opinion. Pandemonium says, hard landing, nastiness, man. Let's go. Kirk said, Dan said, man, just keep the wheels facing down and we're good. And keep them inflated too. Turns out that's important. Yeah. I'll see. And we have the inflation numbers coming out tomorrow. We'll actually be able to see again, because we got retail sales week and a half from now. So we'll be able to see, are y'all still spending money going out? Are experiences still good for you? Is that where you're spending your money? Or are higher gas prices starting to suck up some of that fun Friday night slushies and whatever you guys do? Yeah. Chris, if this week is boring in the markets, we'll come back to it. How about that? Try to get the updated data. I think it updates I think it updates tomorrow, actually. But we'll try to keep going with that. Not the hard or soft landing is concerned, searching for a specialty makes Jerome's job so hard. I don't know. I don't know what you're saying. Tire inflation. It's important, You just expect them to be there for you when you land an airplane, and sometimes they're not there. Thankfully, nobody was in the other seat. I was by myself, so there was no weight on that side of the plane. But it's what it is. All right, I'm going to wrap it up there and get the heck out of here. Appreciate you guys hanging out with me here today. Congratulations, Tate, on winning Guess the Dow. Jazz After Dark here tonight. If you want to talk about RMDs or you're close to that age, we're going to try to keep up and drill it all down for you, but there's just the stupidest changes, and there's so much here. It's caused more confusion than anything else, but we're going to clear it all up for you tonight. We'll see you then, and tomorrow as well. Adios.